everyone. My name is Jackie Reichers. I'm the Executive Director of the Illinois Association of Mutual Insurance Companies. Thank you for joining us for today's program, Navigating Turbulence in Today's Mutual Insurance Market. Today's insurance world has become challenging, and we cannot continue to do business as normal. Although we were successful in updating the Farm Mutual Act, we still have obstacles in front of us. IAMIC lost 12 farm mutual companies in the end of 2023, and we are expecting a few more mergers this year. Ensuring that our products are in line with our competitors is crucial. As the Department of Insurance looks at us under a microscope, we must have adequate policies in place. Members from AAIS have put together a great program to help you understand what's available, as well as the steps that it takes to change your current policies. I now pass the reins to the AAIS VP of Products, John Kadous. John?
Thanks, Jackie, for that nice introduction. And hello and welcome to a special presentation dedicated to the needs of the Illinois mutual market. As Jackie mentioned, it's a tough market these days, made tougher by evolving and emerging risks, unforeseen claims development, and fluctuating economic conditions. For those looking to navigate these market conditions or jump into these turbulent waters, we're here to provide you with information you can use to plot a course, make good decisions, meet regulatory requirements, and execute successfully. For those less aware of AAIS, we're the only national not-for-profit advisory organization. We have over 700 member insurance carriers, many that are mutuals. For decades, we've also served as a licensed statistical agent in 51 jurisdictions for all P&C lines, collecting data that helps members meet regulatory statistical reporting responsibilities. Our P&C programs are managed by a team of experienced product management professionals committed to developing and maintaining forms and manuals fully compliant with the latest laws and regulations. All our programs are supported by a team of lawyers, government affairs, and product compliance specialists dedicated to monitoring laws and regulations impacting forms and rates. Our teams are armed with modern tools and technologies that support top quality policy language and rating guidance, regulatory compliance, and filing services, also specialized onboarding and speedy adoption, all hallmarks of AAIS. Today, I'm joined by several of our most talented product and service managers who will discuss how you can adopt or transition to AAIS programs while remaining current and compliant with filings and successfully serving your customers. Now, let's kick things off with our first presenter, Casey Davis, product manager of our industry-leading farm and agribusiness programs. Casey?
Thank you, John. I am happy to be here today to talk about the AAIS Farm Owners Program. We're going to take a look at the program at a glance, and then I'll dive into some more details of the program. So starting out, we'll look at the base forms for this policy. We have a couple of base forms that currently, with the structure of the Farm Owners Program attached to every policy, those are the additional policy conditions and property coverage forms, and the farm property base form. We also have optional base forms, which include the dwelling property base forms, of which we have 5 available, and we also have 2 farm liability base forms. We also have state-specific mandatory and conditional endorsements, as well as 112 optional endorsements. The Farm Owners Program has a composite rating plan available, and there are some business occupancies that are accepted, which are defined by company guidelines. So the 2 base forms that attach to every policy currently are the additional policy conditions and property coverage terms. These include additional policy conditions that apply to both the property and liability coverages provided by a farm owner's policy, as well as the additional policy terms that apply only to the property coverages provided by the farm owner's policy. The name of this form is the FO20 Series 1.0. The farm property base form provides coverages for scheduled barns and other farm buildings, scheduled farm personal property, and unscheduled farm personal property. This is Form FO6 Series 1.0, and it is on a specified perils basis. The dwelling property base forms, as I mentioned, there are 5 options. These are owner-occupant 1 to 4 family farm dwellings used for residential purposes. We have the FO1 1.0 and the FO2 1.0, which are both specified peril forms. The FO3 1.0, coverage A and B are open perils and coverage C is specified perils. And the FO5 0200, which is an all open perils form. We also have a tenant form, which is the non-owner personal property of the principal farm dwelling, and that's the FO4 1.0, which is also a specified peril. And as far as liability is concerned, we have the 2 farm liability base forms available, which are the personal farm liability base form, the GL2 1.0, which covers farm personal liability coverage, and the commercial farm liability base form, the GL610 1.0, which covers commercial liability coverage for farm premises and operations. Mm-hmm. So looking into further detail on these forms and the loss settlement terms on each of these, looking first at the dwelling property base forms. These losses are settled according to replacement cost terms, except when they do not apply, then the actual cash value terms apply. One of these special instances is for mobile home losses, and they are settled on actual cash value terms. The farm property base form losses are settled according to actual cash value terms. There are optional endorsements available to settle claims according to actual cash value for coverages A and B on the dwelling property, actual cash value for the roof, replacement value for coverage C, expanded replacement cost terms for coverage A and B, replacement cost terms for mobile homes, modified replacement cost terms, replacement cost provisions for well pumps, automatic adjustments of limits, which is the inflation guard for coverages A, B, C, and D, and the replacement cost terms for farm barns, buildings, and structures. Deductible options include, for the dwelling property base forms, a flat deductible, which ranges anywhere from $100 to $10,000 for all perils except earthquake. There are optional higher windstorm or hail deductible for coverage A limit, which is less than $100,000. And these go by flat deductibles of $500 to $5,000, and all other perils being $100 to $2,500. For optional higher windstorm or hail deductible for coverage limit greater than $100,000, the options are 1%, 2%, or 5% of coverage A limit, and all other perils have a flat deductible of $100 to $2,500. The farm property base forms have deductible options ranging from $100 to $10,000 for all perils except earthquake. So looking further into the endorsements available, we have the Illinois specific mandatory endorsements, which include the Civil Unions Amendment, an amendatory endorsement, the no coverage for non-highway vehicles operated on public streets, highways, or roads, and we have an endorsement for both personal and commercial liability. We also have the mine subsidence coverage, also available for the residential and commercial buildings, and that is a conditional endorsement. Mandatory endorsements include water exclusion, virus or bacteria exclusion, amendment of policy terms, punitive damage exclusion, Migrant and Seasonal Agricultural Worker Protection Act exclusion, the lead liability exclusion, amendment of aircraft exclusion, and the asbestos exclusion. Because weather is on the top of everyone's minds these days, I included a few of our weather-related endorsements, those being the actual cash value loss settlement terms, the roof surfacing amendment actual cash value, windstorm or hail deductible, windstorm or hail deductible for dairy and farm products in the open, and cosmetic damage exclusion for exterior wall and or windows and or door surfacing and or roof surfacing.
All right, thanks, Casey. That was terrific. As a reminder, please enter your questions. Hit that Q&A button at the bottom of the screen and enter your questions so that we can respond to those for you. We really are here today to help you to better understand our programs and how you can leverage those. Now I'd like to introduce Linda Jancik. Linda is product manager for personal lines, including homeowners and dwelling property. Linda.
Great. Thank you, John. So starting with the dwelling property program, you'll see that we did a similar outline to the farm owners program. And I think people kind of appreciate that because we're trying to keep things as consistent as possible, especially when you're moving more than one line. You like to see some consistency. So the dwelling property program at a glance is the Series 519, and it covers both owner-occupied and non-owner occupied dwellings. The base form is non-owner occupied, but then you can use it. There's an endorsement for owner occupied, and it's a multi-state program. It has state-specific endorsements and rating information. There's a landlord's premises only liability option available if that's needed. There are 3 base forms, the DP 1, 2, and 3, as well as state-specific mandatory and conditional endorsements, and 26 property and 6 LLP optional endorsements. So as far as eligibility, it's for 1 to 4 family dwelling or town or row house used for residential purposes. It can cover personal property, seasonal dwellings, mobile or manufactured homes, condos, or cooperative units. Okay, similarly to what Casey went through, some of these will look familiar because, again, they're one of our important things is to keep things compliant. And so we do have the policy conditions and a mandatory endorsement for Illinois that's mandatory, but you'll see that same civil unions amendment that Casey talked about, the mine subsidence coverage for Illinois, and then no coverage for non-highway vehicles operated on public streets, highways, or roadways. In regards loss settlement terms, again, for the base form, the DP 0001, and for mobile manufactured homes, losses are settled according to actual cash value terms. And then in the base forms 2 and 3, for coverages A and B, losses are settled according to replacement cost terms with exceptions that would apply for actual cash value based on certain property. Optional endorsements are available to settle claims according to, you can elect for actual cash value coverage A and B, actual cash value for roof surfacing, actual cash value for roof surfacing just for windstorm or hail, higher limits, extended replacement cost coverage, and inflation guard, which would be automatic increase of insurance amount each year. Replacement cost loss settlement terms for personal property option is also available. Similarly, as Casey mentioned, for deductible, we have flat deductibles, which would be all perils except earthquake from $100 to $2,500. We have a deductible theft for coverage C for $500 to $2,500, and we have an optional windstorm or hail deductible for coverage A limits over $100,000. It's a flat deductible of $100 to $2,500, and then you can also elect a percentage 1 to 5% of the coverage A limit. Okay, so moving on to the homeowners program. Some of this will sound familiar because, as I mentioned, we try to do it as a consistent format, so it should look familiar to you. But for homeowners, we use the Form Series 0908, and it's a multi-state program with state-specific endorsements and rating information. The difference between the homeowners is the Form Series can be used, the same Form Series can be used for by peril or composite rating plan. This is a real advantage if maybe starting off you want to use the composite plan, but you have plans to go to by peril down the road. It's the same set of forms and endorsements. There are 8 base forms, state-specific mandatory and conditional endorsements, and 86 optional endorsements. Eligible for the HO1, 2, 3, 5, 8 that are owner-occupant 1 to 4 family dwellings used for residential purposes. We have an HO004, which is tenant, non-owner of a dwelling or an apartment. The HO6, which would be owner-occupant of a condo or cooperative unit. And some business occupancy are accepted, and it would be defined by company guidelines. Okay, so you'll see some of these same Illinois-specific endorsements. Some are mandatory, some are conditional. The Civil Unions Amendment, the mandatory endorsement, no coverage for the non-highway vehicles operated on public streets, highways, or roadways, an asbestos exclusion, amendment of policy terms, a different one for each form. So there's one for the HO1, 2, 3, 4, 5, 6, and 8. Excuse me, a liability exclusion for lead, a liability exclusion for pollutants, bacteria, fungi, wet rot, and dry rot, a punitive or exemplary damages exclusion, and mine subsidence coverage for Illinois residential buildings. Similarly, I know that with profitability being so important, there are some options. In the base forms, losses are settled according to replacement cost terms. except they don't apply that or when they do not apply, then it's actual cash value terms. But we also have some optional endorsements available, and that would be actual cash value for coverage A and B, actual cash value for roofs, actual cash value for roofs for the windstorm or hail peril only, higher limits or extended replacement cost coverage, inflation guard, which is automatic increase of insurance amount each year, and functional replacement cost. Deductibles, again, we have various options. We have flat deductibles for all perils except earthquake, 100 to 2,500, 2,500 deductible theft for coverage C, optional higher windstorm or hail deductible for coverage A limit over 100,000, flat deductible 100 to 2,500, and a percentage deductible, which is 1 to 5% of the coverage A limit. And again, as we talked about weather concerns, we know are top of mind. We also have, excuse me, an inland flood, which rating is provided through Munich Re, or if you have your own, but it's an endorsement that attaches to the homeowner policy. We have actual cash value loss settlement terms. So for the roof surfacing amendment for windstorm or hail, or the roof surfacing amendment actual cash value, wind and hail deductibles, and we also have a cosmetic damage exclusion for exterior wall surfacing, roof surfacing, and our exterior door and window surfacing. This is just a visual to show the difference when I mentioned that we use the same forms and endorsements, but we have two different rating manuals and loss costs for composite versus by peril. And the composite takes the loss costs and the rating factors based on an average mix of perils, and it would be more limited because all perils are grouped together. The by peril, in contrast, develops loss costs and rating factors separately for each peril. So it would be more refined and flexible because each peril is rated independent of other perils. And the last program I just wanted to touch on is the Mobile Homeowners Program. And there is an endorsement, the MH 7800. It's mandatory, and it converts the HO 1, 2, 3, 4, and 8. And then the combination makes this acceptable to insure mobile homes. And the Mobile Homeowners Program rates the wind exposure separately from the non-wind exposure.
All right. Thanks, Linda. That was very informative. Now that we provided an overview of our Farm and Ag and personal lines programs, let's discuss how you would effectively adopt them for use in the market. Our next presenter is Sheila Morris, who leads our onboarding services. Sheila.
Thanks, John. I'm pleased today to talk a little bit about conversion to AIS programs. Today we'll cover 4 topics: program analysis and product development, compliance, filings, and finally systems conversion. So the first step in a program conversion is a deep dive and analysis of the AIS program, the forms, rules, and rating in comparison to your current program offering. We'll start with the forms, initially analyzing and comparing AIS coverages to the current program offering, drafting any coverage changes that come out of that analysis. This could be completely new forms that the company needs, or it could be proprietary changes to AIS forms and endorsements. And then finally, preparation of the policy declaration pages and policy jackets that would work with the AIS program. Moving down to rules, it would also include a deep analysis of AIS rules and identifying any changes that might be needed based on your company's specific needs. You would then move to the next phase, which would be development of the company specific manual based on AAIS manual rules. Rating is another important caveat. So you'd need to analyze loss costs, rate levels, and supplementary rating information in the AIS program as compared to your current program. The AIS programs are also loss cost based, so the company would need a loss cost multiplier that would apply to the loss cost to develop the company rate. And also, if there's any company specific rate changes, this would also need to be determined. As a final step, you would need to create the final company rate pages based on the AIS loss costs and the application of the loss cost multiplier. There's other very important caveats to what needs to be done. One of those is policyholder disclosure notices to identify and disclose to your insureds changes in coverage. And then finally, if you are acting as a domestic Illinois carrier, you would need to consider statistical reporting requirements to the state. And AIS does act as a stat reporting agent for our members. And with that, we have statistical plans, and we have a tool for companies to submit their stat data to us so we can turn around and report that as needed out to the insurance departments. From a compliance perspective, you definitely want to make sure that you have the proper licensing, so you would secure any additional licensing if applicable. And then any proprietary materials that you might have developed, we would want to check against the Illinois compliance requirements to make sure that they do meet those requirements. Keep in mind that the AAIS forms, manuals, etc., comply with Illinois state requirements. And then you would determine any state filing requirements pertaining to rules, loss cost, lead times, required SURF documents, and any necessary exhibits. And then, of course, move to the phase where you're developing those supporting exhibits and completing those required SURF documents. So AAIS publishes a compliance guide, and part of that compliance guide is a company action section that delves into each jurisdiction's filing requirements. And so what I have shown here are the Illinois company action initial adoption for forms. So AAIS does file our farm DP homeowners and mobile homeowners forms in the state of Illinois, and they get approval of those by the department. And therefore, when companies go to utilize them, they initially just have to do a filing that's a reference filing to let the department know that they are adopting the AAIS forms. Of course, you would also include your deck page and any other proprietary materials that you would want to include in that initial filing. We also have sections developed in the compliance guide related to rules and rating information and loss cost rating information. And for the programs we're speaking about today, AAIS does not file those rules with the department. Instead, the department requests that companies make filings of the AAIS materials. So you would create the final rate pages, final manual pages, and submit those to the DOI for approval. So a typical adoption filing for the programs we've discussed today, and this can always vary by the type of insurance or the program, but generally speaking for these lines, for the forms filing would include an explanatory or filing memo, and that reference filing to adopt the AAIS forms. AAIS does publish a form and endorsement list that includes all the reference filing numbers for the Illinois Department of Insurance, copies of proprietary forms, and completed state-specific forms. I would also say that if you are adopting AAIS materials, the Illinois department does like to see that companies have granted AAIS filing authorization as part of that process. From a rules and rating perspective, the SURF filing would include an explanatory memo. It would include any copies of AAIS materials and company-specific rate pages and rule pages, and any support material if applicable. And for rating, final rate pages would be needed, as well as support material. For example, loss cost multipliers that would be filed, you would typically include any actual support of that multiplier. And then finally, within SURF, there would be a need to potentially fill out the rate and rules schedule tab and complete any SURF state required documents. And finally, today, I'd like to speak a little bit about systems implementation. This is, of course, a very key aspect of conversion. So the first step would be, as you are analyzing, identifying program components that need conversion, features of the AAIS program that are new and have no counterpart in your current program, or features that in your current program that are not available in the AAIS program, and a determination if those are still required. And then just assessing any additional needs that will help you then move on to the next phase, which is defining system requirements based on that analysis, and then ultimately developing the system, and of course, the all-important QA testing of the system. And keeping in mind that if you do have stat reporting requirements, that you would want to consider that in your system's implementation and configure your stat reporting as well.
All right, thanks, Sheila. That's a great way to wrap up. Our onboarding services are frequently praised by our members. Before we go to questions, I'd like to mention that we are able to integrate our products into most policy administration systems to make adoption that much simpler. Sheila talked a little bit about that, and it is something that we feel is very important. So we have actually another team dedicated to producing essentially the digital content that various policy administration system providers can utilize to get the products in market more rapidly. As a not-for-profit, we're not here to push products and services to make more money. We are strictly here to promote member success. We partner with dozens of third-party vendors that offer complementary services to ours, from policy admin to technology and software services to data analytics companies, from loss mitigation and appraisal firms to brokers and reinsurers. We'd rather build these relationships than build profit centers. And to tie it all together, our engagement team works with each member to make sure they take full advantage of membership in AAIS. I do have one question here, and I think Casey very early on talked a little bit about how we keep our products current, how we keep up to date. Question kind of was in that regard. How do we keep up with what's happening in the market? And I guess I'll start that one out, then I'm going to ask Linda to talk a little bit about it. So first of all, I'll say that a large part of the intel that we have around what's going on in the marketplace comes from our members. And that comes from our members in large part through our product advisory councils. And Linda, would you like to talk a little bit about the Personal Lines Council?
Certainly. So we have a very robust personal lines council. In fact, Jackie is a member of this group. And one of the things that we do, we are always looking for emerging issues or what our members might be experiencing so that we can either research it or bring information forward. Is this something we need to address, or at least to talk about it as a group? So that's one of the things we certainly do to make sure that things are current and compliant, as well as I think John mentioned in the beginning about our regulatory area. So if it's compliance related, we also address those, but those emerging issues are something we are very, very keen on.
All right, thanks, Linda. I also thought it might be good to, I mentioned the work that we are doing to be able to enable more rapid adoption through policy administration systems. And Sheila, as part of her role, works pretty closely with a team that is focused on creating those digital assets. So Sheila, would you like to talk a little bit about what we are doing in that space and how that enables our members to get up and running more quickly?
Yes, of course. So we are working on various assets that will help members get speed to market with our program implementations. And those include things such as rating data tables that are in an Excel format so they can be easily ingested into a policy issuance system. Additionally, we're working on mind maps for many of our products, and mind maps give a visual representation of the product and again, assist in the implementation of our various products into various systems. It also helps underwriters, I think, kind of understand products, and product folks kind of get a better sense of the AAIS, farm owners, homeowners, products, etc. And then finally, we offer rating examples for most of our products that are helping member companies understand the premium determination rules. So we do work with members to make sure that they have as much support as possible in that regard for, again, speed to market.
Thank you. And also, I guess I'll just add on to that, I did mention that we work with a lot of different policy administration providers, and we truly do, and they really run the spectrum from some of the smallest out there to the absolute largest. So there's a good opportunity that we have either worked with your policy administration system provider, or if not, well, we'd probably like to find out about them so that we can start working with them. Yeah, I'll pass it back over to Jackie in just a moment, but just want to say on behalf of Sheila, Linda, Casey, and I'd like to thank you for your time and attention today. Please feel free to reach out to any of us with any questions you might have on today's discussion and how we can best support you going forward. I also mentioned a couple of minutes ago our engagement team, and I should also mention Tiffany McConnell. Some of you may have met Tiffany. I believe she has attended the IAMIC conference, or convention rather, the last 2 years. So you may have met Tiffany, and she is the engagement manager that works most closely with members of IAMIC. So With that, oh, and yes, also please reach out to Jackie to learn how you can take advantage of the AAIS member benefit that you get as being an IAMIC member. Now I will pass it over to Jackie one last time for some final words. Jackie?
Thanks, John. And thank you to the AAIS panel for your presentation today. As always, IAMIC is here to be a resource for you. And as John mentioned, this is an added member benefit, allowing you access to court-tested forms that you would not be able to afford on your own. So please take advantage of that. Most importantly, if we have questions, even though we're wrapping up today, we will make sure that we get those answered for you. So that's all we have for today. Thank you again, and we hope that you enjoy the rest of your afternoon. And let's hope the wind doesn't blow, right?